Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar at present is holding on to the recent gains as it still flirts around with the 75-cent handle. Yesterday's latest job report revealed that Australia's economy added 22,600 jobs during the month of April, which was up from a small contraction in the number of jobs created back in March of negative 0.7, which was ahead of the market forecast of 19,800. This was the highest number of jobs to have been created in any month during 2018 to date. On the flip side, though, the unemployment rate came in slightly disappointing as it notches up from 5.5% to 5.6%. With the recent decline paused and at present a short-term correction appears to be in motion, therefore could see a rise up towards 75, 60, 65. With the RSI still holding relatively to a bullish stance, we shouldn't discount any upside tests at present because the market may tackle this level and look towards the 76 cents. Above 75, 60, 65, I am a seller as I feel the market will be preparing for a bearish ambush and therefore see a rejection from 76 and look back down towards the region of 73, 75, 80. An interesting trading pattern for the market for the euro over the night as it briefly again looks under 118. The market found short-term support overnight at 117.75 before rebounding. Another figure out of the US, the Philadelphia Fed, said its manufacturing index rose to a reading of 34.4 from 23.2 in May. That was the highest reading since 1973. Now, some of you may not know, but the index is a leading indicator of the economic health. Business react quickly to the market conditions and changes their statement when can be early signaled for future economic activities such as spending, hiring, and investment. So, with the technical layout still a little bit uncertain about any recovery, as the market's got to clear 119.15 to reverse its bullish action, with the technical still somewhat supporting a downward test, could see the US dollar book further gains and look towards the region of 94 after recently posting a high of 93.49. Therefore, this would see the euro tumble further and look towards the region of 117 with an objective at the moment of 116.60-65 due to the break of the 118 level. Well, dollar yen overnight posts further gains as it now clears the level of 110.45.55 and now just a handful of points away from its objective of 111.25. I still believe the market can still test higher, but a pause may come in at 111.25 and some profit taking could emerge. We are, in terms of the RSI, overbought, so I do expect to see a short-term pullback with the uptrend now seen at 109.70.90. What is disappointing this week, the pound hasn't made any significant moves, however still holding above the 134.45.65 level. Earlier in the week, the market turned its eyes on the British jobs, with the UK employment figures suggesting British employers hired many more workers than expected in 2018, but the wage growth has yet to accelerate sharply. With employment rising by 197,000 during the first 3 months of this year, it was a jump since 2015 and far exceeding the 130,000 forecast. At present, I still expect to see the level hold at 134.45.65 and eventually see a challenge to the upside at 135.65 and on towards the region of 136 and reassess from there. Well, gold is pretty much flat as it trades around 1,388. Still, bearish implications holding to gold. Could see another test to the recent lows of 84 as it still holds there presently. A break underneath there would give further scope to 78, and I am a little bit concerned until we start seeing some safe haven demand coming back into the market that we could see a little bit lower, but not coming out with that call. But the base is located around 1,255. We do need to see a recovery very soon, otherwise the downside test will come through. Resistance on the day, 95, and above that, 1,303.205. And rounding off with oil, well, we have a doji after another attempt at the 72 level fails. And from the posted doji, I do expect to see weakness return. I am not bullish at these levels, and I'm still seeing divergence from the RSI, so therefore I do expect to see a pullback that comes into a target at present of $67.50, with the immediate target at $70. So that wraps up for today. Thank you very much for joining me. I hope you enjoy the day and enjoy the great start to the new weekend.